I think it is important to think about central bank digital currencies and then there's private versions. And so one thing to separate is when we look at something like China, they've been researching this topic since like 2014, and they've been testing it for a few years now. And so they're almost at the deployment stage for their central bank digital currency. And to some extent, that's because just like in business, if you're the incumbent, you have less incentive to disrupt yourself. Right, it's the hungry newcomer that wants to do something different. So China wants to be able to buy commodities in their own currency. They want to surveil their citizens as much as they can. Unfortunately, they want to go around the SWIFT system. They have a bunch of incentives that really, when they saw the technology, they're like, wait a second, we can really use this. And so they were quick on that. And so they're ahead of the curve there. The Federal Reserve is the king of the current system. And so they've been not aggressive at looking into central bank digital currencies like some of those other ones have. And so if they want to move forward now, I think in the West probably we're looking at least for a period of time more reliant on those private stablecoin type of entities, because the Federal Reserve would take probably years to deploy something. If they start from scratch. So, Facebook's Libra was an early attempt. They wanted to make essentially a Bancor or like an SDR, like a basket of major currencies, but issued by this private entity. And that regulators didn't really like that. So that kind of got halted. And then they resurrected that as DM, which is more like separate stable coins. They'd have a dollar stable coin, then they might separately have a euro stable coin. And so they, from their perspective, they want to have their own wallet. They want to have this ecosystem, and basically they want to kind of displace the banking system to some extent. So stable coins are very efficient for anyone who's kind of worked with a digitally native business or use stable coins. They can be far more effective than, say, wire transfers. You can send a stable coin payment internationally at 2 a.m. on a Sunday, and it settles in a few minutes, and you didn't have to ask permission. Now, regulators still like stablecoins more than something like Bitcoin, as long as they have control of it, because, for example, stablecoin issuer can blacklist certain addresses. And so it's not a fully decentralized system like, say, Bitcoin is, where it's unstoppable. Pretty much. But for the most part, if you were kind of, not on some blacklist, you're using this fairly permissionless, decentralized thing, and you're going around banking hours, and you can go international. And so obviously regulators are trying to get a handle on that and figure out what that means and what kind of systemic issues it can have. And banks are, I think, somewhat worried about that sort of thing as well. But those are the advantages of that stablecoin technology. And so I think in the West, probably going to see those projects launch, but with heavy regulation. So they want to make sure that they're holding pristine collateral. None of they're not exactly thrilled with the offshore ones that we don't know what they hold for sure or how much they hold. They want to have these entities that are holding it. If the stable coin's backed by dollars, they want it to be backed by dollars and T-bills that are audited well, right? So. I think that's the type of thing we're going to see. So we're seeing UDS DC, for example, Circle. That's kind of the more regulated stablecoin, you could say, a little bit more above board than something like Tether. Gemini has also had a very regulated stablecoin. They've kind of stuck to the pristine collateral approach. Facebook clearly wants to orientate themselves around that direction as well. The difference being that so far, the primary usage for stablecoins has been speculating in crypto markets, right? So they bring the stablecoins to an offshore exchange. They use it as a unit of account to trade Bitcoin, Ethereum, and these other tokens. Whereas Facebook wants to make that more of like a peer-to-peer payment system. They want to use stablecoins more for that purpose. Now, there are businesses that are kind of early that have been using stable coins, and it's like if you talk to them, once they start doing that, they never want to go back, right? Because no one wants to send like a 3-day wire transfer, then you lose track of it. You're trying to argue with your bank, and you get told no. They just want to be able to send that payment 2 a.m. on a Sunday if they want to, and so that's spreading, but it hasn't really gotten too far into consumer finance yet, and so that's where Facebook wants to go after. And if you look at their new white paper, their second version, their DM, not the Libra, but the DM, they reference central bank digital currencies. They kind of view themselves as potentially working with central bank digital currencies as an overlay, as an extension. So, for example, their reserves could be central bank digital currencies. They could be Fed coins, for example, and that this would be like a tech layer over that has more features than the Fed could do on their own. So that's kind of a big question going forward, is how fast is this ecosystem going to develop, and what direction it's going to take. But I think that's kind of one way to think about it, and then we monitor it and see if we see a change in direction. I mean, obviously in China, we have the more dystopian version, the surveillance coin that's like linked to a social credit score. Very horrifying. It basically gives the state tremendous power. So, the ideal future is that you don't phase out cash or private transactions while you add this for people that want to use them. And so, for example, if you're sending a wire transfer, you're already getting surveilled anyway at that point. And so stable coin transfers are just way better when you're already operating inside of a surveilled system. It's just better. It's basically technology applied to multi-decade-old systems, and it's just a better version of the same thing. And so really that's just better. But the risk is if they try to phase out cash, and so that's where you can get, for example, locked into negative rate type of environments because you can't withdraw to cash, and it makes it so that they can surveil every transaction, whereas cash has always been the most private type of interaction. So people have often been concerned about cryptocurrencies and their use in crime. Criminals actually prefer cash because that's really the most private type of transaction. Not everybody, it's privacy is not the same as criminality. So plenty of people just want to have privacy with their transactions, and I strongly support that they should be able to do that. They should have an option to do that. And so in a world where cash still exists, in a world where something like Bitcoin exists, which is like pseudo private, can't be stopped, can't be told no. So I like those types of bearer assets, those private or semi-private bearer assets, alongside stable coins to replace some of the clunky parts of our financial system. So the risk is that this technology does give policymakers a lot of tools, many of which negative, with China being an obvious example. And I would hope that people push back and kind of advocate for privacy. We've seen some kind of infringements on privacy in countries around the world over the past year or so, and technology just makes that easier and easier for them to do. So I think there are kind of dystopian risks, and one doesn't have to think very hard because we literally see China already doing it, and we see other countries kind of flirting with some authoritarian policies.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.